$4,661. That is what the average American pays in closing costs. It is due the day you sign. In one payment. Think of it as a used car you did not know you were buying. And almost nobody explains it to you until you are already committed. Here's what makes it strange. Last year, closing costs across America went down 2.9%. But in one state, they went up. Same country. Same 12 months. Opposite direction. That is not about credit scores. It is not about lenders. It is one fee. And there is a second twist coming. One place dropped harder than anywhere in America, and it is still the most expensive place to close. Stay for that one. Here is why this catches people. You save for years. You get approved. You watch mortgage rates like the weather. Then, days before you sign, a completely different bill shows up. Nothing you did prepared you for it. On a typical home, closing costs run 2 to 5% of the price. On a $400,000 house, that is $8,000 to $20,000. That is on top of your down payment. On top of moving costs. And it is not spread over years like a mortgage payment. It is due in full. Usually by wire transfer. Before anyone hands you a key. Most of it is not negotiable. It does not matter how hard you negotiated the price. It does not matter how good your interest rate is. This number arrives anyway. Picture how it goes. You find the house. Your offer is accepted. The loan is approved. Then the final bill lands. Thousands more than you pictured. There is no time left to shop another lender. You find the money fast. Or you delay everyone. Or you walk away from a house you already packed boxes for. And here is the part that should annoy you. That number is knowable. Weeks in advance. If you know where to look. So what is actually inside that number? It is not one fee. It is 3 buckets of fees that happen to land on the same day. Once you can see the 3, the whole thing stops being mysterious. Bucket 1 is what the bank charges you. A fee for creating the loan. That is called origination, which means the bank's charge for setting your mortgage up. A fee for checking you can repay it. That is underwriting, which is basically the bank doing its homework on you. And the appraisal, where a licensed stranger confirms the house is really worth what you agreed to pay. Here is the useful part. These fees change from lender to lender. 2 banks can offer the exact same interest rate and still charge hundreds of dollars apart in this bucket. That is why getting more than one quote pays. Bucket 2 is fees that are not really your bank's at all. Title insurance, which is protection in case someone shows up later claiming they own part of your house. An old unpaid debt. A relative nobody mentioned. A fee to your county for filing the paperwork that makes you the legal owner. And in most states, a transfer tax. That is a fee your state or local government charges purely for changing whose name is on the property. That last one is the whole story of this video. Bucket 3 is money that is actually still yours. Lenders usually make you prepay a year of home insurance. They also collect a few months of property tax up front and hold it in escrow, which just means the lender holds your money and pays those bills later. It feels like a fee. But nobody keeps it. It is your own future bills, collected early. Now back to that transfer tax. Because it is the one that swings. Think of it as sales tax. But for a house, your bank does not set it. Your bank does not keep it. A state legislature set it, and your bank just collects it. And it is charged as a percentage of the price. Hold on to that. It explains everything that comes next. Here's what the newest industry report found, comparing 2024 to 2025. Nationally, closing costs fell 2.9%. But they did not fall because fees got cheaper. They fell because home prices dipped in a lot of places. Lower price means a lower percentage means a smaller tax. The whole national average got dragged down with it. 27 states, plus Washington, D.C., saw costs fall. 23 saw them rise. Now Delaware. Delaware went up 4.5%. The biggest increase in the country. In the exact same year most places were falling. Why? Delaware charges a flat 2.5% transfer tax. One of the highest in America. Add the bank and title fees on top, and closing there runs about 3% of the house price. Highest in the nation. Nobody in Delaware did anything wrong. Their state law is simply more expensive. And here is the twist I promised you. Washington, D.C. fell 21%. The steepest drop anywhere in America. And D.C. is still the single most expensive place in the country to close. In actual dollars. Both of those are true at the same time. Because cheaper than last year and cheap are completely different things. Headlines blur them constantly. Now you will not. Now the good news, if you live in the right place. 16 states charge no state transfer tax at all. Alaska, Arizona, Colorado, Idaho, Indiana, Kansas, Louisiana, Mississippi, Missouri, Montana, New Mexico, North Dakota, Oregon, Texas, Utah, and Wyoming. If you are buying in one of those, that line can genuinely be zero for you. But here is the catch almost nobody mentions. Several of those same states still let a county or a city charge its own. So my state has no transfer tax does not automatically mean you owe nothing. You have to check your county too. Let me make all of this concrete. Say you are buying a $400,000 house. Bucket 1, the bank. Creating the loan might run $2,000 to $4,000. The homework fee, a few hundred. The appraisal, roughly $500. Bucket 2, the outside fees. Title insurance on a house that size can easily reach 4 figures. Filing fees, a couple hundred more. Bucket 3, your own money collected early. A year of insurance. A few months of property tax. Call it $1,500 or more. Now add the transfer tax. In Texas, that line is zero. In Delaware, at 2.5%, it is $10,000. By itself. Same house. Same loan. Same buyer. Same day. $10,000 of difference, decided by nothing except which side of a state line you happen to be standing on. That is why a national average is close to useless for planning your own closing. It is an average of 50 completely different rulebooks. Digging up the actual mechanism behind a number, instead of repeating the rounded-off version, is the whole point of this channel. If that is useful to you, subscribing means the next one finds you before you need it, rather than after. Now the honest part. Because this is where a lot of videos get sloppy. First, whether the buyer or the seller pays that transfer tax is not a national rule. It changes by state. Sometimes by county. Sometimes it is just local habit nobody ever wrote down. In some markets the seller pays it. In others the buyer does. In some places they split it. And it is usually negotiable in your offer. So a national average buyer's cost may not even describe your side of the table. Ask early. Second, every figure here is an average. Your loan type changes it. Your lender changes it. Your county changes it. Two people buying on the same day, in two counties of the same state, can pay very different totals. Third, this is 2025 data, published in mid-2026. Transfer tax rates change when state legislatures change them. Home prices move constantly. So treat this as how the machine works. Not as a permanent fact about your state. Fourth, all of this assumes a normal single-family house bought with a mortgage. Buying a condo? Expect extra fees from the building itself. Paying cash? You skip the bank fees entirely. But you still owe title insurance, filing fees, and the full transfer tax. Cash buyers often assume closing costs do not apply to them. That one is simply wrong. And to be completely direct about what this is general information about a real, documented fee. It is not financial or legal advice for your purchase. It is not a recommendation for any lender, title company, or agent. This channel has nothing to sell you, and no referral fee riding on which company you pick. Your own final paperwork is the only number that counts for you. Your lender or closing agent should answer anything specific to your deal. So here is exactly what to do. 5 things. None of them cost you anything. 1. Get a loan estimate from more than one lender. That is a standard form. By law, a lender must send it within 3 business days of applying. Every lender uses the same sections. So you can lay 2 side by side and compare line by line. Most people get exactly 1. Getting 2 or 3 is the easiest way to spot a fee that is out of line. 2. Look up your own state's transfer tax rate. Search your state name plus real estate transfer tax. A government page usually comes up first. In a high-tax state, this is likely the biggest single line on your bill. It is also what a generic online calculator gets wrong most often. If your state charges nothing, call your county records office and ask about a local one. It is a short call. 3. Ask who customarily pays it where you are buying. Buyer? Seller? Split? Any agent working your market will know instantly. It is a completely normal question. Ask it before you write an offer, not after. 4. Shop your title insurance. In most states you are not required to use whoever your lender suggests. It is one of the bigger line items, so ask what it costs on its own. 5. Actually read your closing disclosure. That is the final bill. By law you get it at least 3 business days before you sign. Compare it line by line against that first loan estimate. Some fees are legally capped in how much they can rise between those 2 documents. So if something jumped and nobody can explain why, those 3 days are when you have the standing to ask. So, quickly, what actually matters here? Nationally, closing costs fell 2.9%. The average purchase runs about $4,661. Delaware rose 4.5% in the same year, because of a rate written into state law. Washington, D.C. fell harder than anywhere in America, and is still the most expensive place to close. All 3 are true at once. That is the point. But the number is not really the lesson. The lesson is that a national average can be completely accurate and still tell you almost nothing about your own closing. The fix is not to distrust the number. It is to go find your version of it. Your state. Your county. Your paperwork. Because the difference between a smooth closing and a stressful one is almost never how much money you have. It is whether the number you walked in expecting is the number on the page. If that is what you want before your next big money decision, the real number and where it came from, then subscribe. That is the whole channel. And if you have closed recently, tell me in the comments what your closing costs came to, and which line surprised you. It genuinely helps the next person watching. See you in the next one.